Good morning, and what a day! Welcome to our special CoinDesk live stream on the first ever White House Crypto Summit. It's Friday, March 7th, 2025. I'm CoinDesk Senior Anchor Christine Lee. We're previewing this exclusive gathering hosted by US President Donald Trump alongside crypto czar David Sachs and the executive director of the President's Working Group on Digital Assets, Bo Hines. They're representing the White House. We're hearing that about 25 to 30 guests from the crypto industry have been invited. The summit is expected to influence legislative and regulatory policy in the digital asset space, including a U.S. strategic Bitcoin reserve that was recently signed by executive order by the president himself. Now, if the White House failed to hand you an invitation, don't fret. It's okay. You can hang out with us and we'll get you all caught up. Our first guest is someone whose company will be attending the White House Crypto Summit this afternoon. Joining us now is Coinbase Chief Legal Officer Paul Grewal. Paul, welcome this morning. Thank you so much for joining us.
Good morning, Christine. Thanks for having me.
So your CEO, Brian Armstrong of Coinbase, will be attending the event. He got one of the prestigious invites. I'm just curious, everyone's wondering what's on the agenda. What can we expect coming out of this crypto summit?
Well, I think what we can expect most of all is a recognition that a new era of crypto has arrived. You will know well, Christine, I think many watching this will know that for 4 years, many in this industry faced near extinction at the hands of a misguided campaign by Gary Gensler and others to either drive crypto underground or drive it out of existence altogether. Today's summit and conversation, I think, will focus on how we move forward, how we move past that era of crypto under attack to crypto under consideration for important legislation in the Congress that'll finally bring the clarity, the certainty, and the stability to this important asset class and technology that so many of us have been working on for so long.
From Coinbase's perspective, what's the message that your crypto exchange wants to get out there to the president?
I think the most important thing to discuss with the president is that there's never been a more urgent time to fight for crypto and to seize on the momentum, not only of the election last fall, but of important developments in this technology that really have created a moment. We need legislation passed that will provide for market structure for crypto. We need to have sensible rules for stablecoins in place so that the United States can fulfill its full potential, as the president put it, to be the crypto capital of the world.
There's a lot in there that I want to break down with you. You mentioned stablecoins, but the biggest news item right now is the executive order on a Bitcoin strategic reserve. And there's a lot of debate on that, whether this is just symbolic or it's a true win, because it's not involving any additional buys by the US government of Bitcoin or other cryptocurrencies. It's just saying that we recognize and we're not going to sell the US stockpile Bitcoin we have due to various criminal seizures. So what is your view on this executive order?
Well, we support the establishment of a Bitcoin strategic reserve. This is a historic moment. The reality is that Bitcoin is the best performing digital asset class since its inception. And Bitcoin is the easiest way for the US to incorporate digital assets into a national strategy. The establishment of a reserve will effectively rely upon seizures that have taken place through law enforcement and allow the US government to preserve those assets, keep them on behalf of the American people, and accumulate them over time. There's no question that a separate digital asset stockpile that may involve cryptocurrencies beyond Bitcoin will also, I think, benefit US taxpayers over the long run. But the most important thing was to recognize Bitcoin's unique place in this ecosystem, its unique role in bringing cryptocurrency awareness and opportunity to vast swaths of the American economy and vast swaths of the American public. And we think with a reserve, the U.S. can leverage its expertise that goes back all the way to other reserves we've built over many decades, including a strategic gold reserve, for example, that goes back over 100 years, and begin once again to heal from the misguided policies of the last 4 years that focused on destruction rather than construction.
Why do you think the US needs a Bitcoin strategic reserve? And I want to preface that by saying we had Peter Schiff coming on next. So he's very critical of Bitcoin. And there are some folks that say, hey, we need a strategic reserve for grain, for material, for military weapons. Cases where there is a crisis, a US emergency. Why would we need Bitcoin in an emergency?
Well, as much as grain or military weapons or other foundational elements of our economy, Bitcoin very well could be a foundation to the global economy. And there's no question that it will be central to national security going forward. Look, we're in a hostile world, Christine, and there's no question that accumulating assets and preserving them for the benefit of the American people is going to be critically important, not just over the next 3.5 or 4 years, but over the next many years and decades altogether. It's I think important that the United States government preserve the United States' unique role in the development of the digital asset economy and make sure that the next global arms race in this digital economy is one that the United States can win.
So would Coinbase space support the US purchasing Bitcoin?
Well, I think the idea of a reserve based on seized assets is an excellent first step. It may make sense in the future for the U.S. to go further and accumulate even more Bitcoin on behalf of the U.S. Taxpayer through purchases. But we have assets in hand today with the U.S. government that could form a strategic reserve without any further taxpayer expenditures, and that frankly preserve the appreciation of Bitcoin and the value of that for the taxpayers' benefit. The reality is that over the last several years, as the United States government has sold off its seized Bitcoin assets, the taxpayers have suffered. They have been denied that appreciation that would come from accumulation. And so I think the White House is taking this in exactly the right way, in that it's beginning with accumulation, developing expertise, leveraging experiences with other strategic reserves, including gold and other materials, and learning how things might evolve from there in a very sort of measured and orderly fashion. We think this is the right approach.
You also mentioned stablecoins are something that will be discussed at today's summit. Coinbase has an interest in the stablecoin world development, having its own stablecoin interest, and we've seen photos online of Paolo Ardoino, an executive at Tether, in DC, I suppose, trying to make his case. I guess, what is Coinbase's position in the area of stablecoin legislation?
Well, stablecoins have clearly demonstrated already their potential to transform the economy, and they're doing this in a very fundamental way by tokenizing financial architecture. Stablecoins are going to play a critical role in settlement and, frankly, in driving innovation across the entire payment life cycle. There's no doubt that we're still at the very earliest days of the evolution and development of stablecoin, but we're already seeing tremendous benefits being delivered, including reducing the risk, providing greater transparency. There's much more interoperability and open access and liquidity, lower costs, just a whole host of benefits that are driving massive stablecoin adoption today. And the vast majority of these stablecoins, Christine, are dollar denominated, and so they not only advance the interests of the crypto community, but of the United States economy as a whole. To further unlock innovation, to move to the next stage of development with stablecoins, we need common sense regulations. We need sensible rules so that stablecoins can continue to provide frictionless, programmable money.
What would that look like?
And at the same time,
what would that sensible legislation look like? Would you want to see transparency in all reserved backs, having financial audits, something that a lot of folks have criticized Tether of requiring? Is that something that need to be done for US stablecoins to be accepted in the country?
Well, I think all stable coins would benefit from transparency as to the reserves that back them. I think that transparency can come from a number of different ways. I think it's very important that there be clear disclosures to consumers and purchasers of stablecoins, so that they understand exactly what their rights are and what they're buying. And I think with sensible rules around these types of requirements, the United States can frankly catch up to other jurisdictions, other parts of the world that already have stablecoin rules in place. So this is not a case where the United States is operating on a blank slate. Unfortunately, because of the last 4 years and because Gary Gensler and the former leadership of the SEC focused on litigation and lawsuits rather than legislation and rulemaking, the U.S. is behind. But I think with sensible standards enacted through legislation that's currently being considered by both the House and the Senate, there's still time for the U.S. to catch up.
Do you think tokenized securities might be a subject? I've seen recently that's something that Coinbase has long had a vision for. And in an earnings call, Brian Armstrong mentioned he'd be interested in a 24/7 trading of tokenized securities and potentially coin stock being tokenized.
Tokenized securities are absolutely an important part of our vision for the future of digital assets. And we are eager to work together with the SEC and other stakeholders to put in place a framework that would allow for the trading of tokenized assets. You mentioned one benefit, which is, of course, 24/7, 365 trading. I think tokenizing equities like coin, but others as well, will also allow much greater access globally to these assets. I think you'll see real benefit from instant settlement. There are just a whole host of reasons why we should move the trading of equities and other forms of securities on chain that will reduce risk, increase access, and frankly modernize a system that hasn't been modernized all that much over the last several decades. It's time for us to move forward.
There's also word that a potential zero capital gains tax might be discussed on American crypto, bringing capital gains on Bitcoin, on Solana, XRP, Cardano have been mentioned, to 0%. What are your thoughts on that? Where do you see Coinbase's role and influence in making those discussions go forward?
Well, I think that tax is maybe one of the most important issues for Congress and the regulators to grapple with, and it may be one of the least discussed. The fact of the matter is we should start with a sensible approach to tax policy in crypto that is based on the simple idea that crypto should be treated no better or no worse than any other particular asset class. For example, when it comes to tax reporting, I think it's critically important that we have sensible rules that impose standards for tax reporting by intermediaries, but that also recognizes that when it comes to crypto, there are unique features of the technology that ought to be accommodated and that need to be understood in order for there to be that parity. Whether the U.S. government or frankly any other government chooses to go further than that and actually adjust the tax rates that apply to capital gains arising from crypto transactions is something for the Congress to sort out, and we think they will work that out over time. But I'm encouraged that we're now finally grappling with this very complicated subject and a very important subject in ways that, again, were simply ignored over the last 4 years, thanks to the misguided policies of the previous administration.
Just one last question, Paul, before we wrap up. But this year is phenomenally different from what you experienced last year between the Trump versus the Biden administration. Before, you were just trying to get licensed and getting no answer from the SEC on how to do that, and then being slapped with enforcement actions. It was a terrible circle of cluelessness on everyone's part. So I just wanted to get some of your personal reflections on everything that has led to this point.
It's a remarkable day. I mean, it wasn't that long ago, Christine, that not only were we begging for rules and banging on the doors of the SEC and other regulators for the chance to make our case. We were squarely in the sights of the U.S. government, and as I said earlier, the target of a concerted campaign to drive not just our business, but this entire industry either underground or out of existence. And yet today, here we are, you and I, talking about a crypto summit at the White House, a meeting of industry leaders with the President of the United States, and executive orders that have now been signed that will soon be followed by legislation and rulemaking. It's a brand new day for crypto, and I'm certainly here for it. Coinbase is definitely here for it.
Paul, thank you so much for joining us, and good luck today.
Thank you so much, Christine. Have a great day.
Right. That was Coinbase Chief Legal Officer Paul Grewal. Well, an executive order to establish a U.S. strategic Bitcoin reserve followed by a crypto summit at the White House is an historic event. But Bitcoin is not without its critics. My next guest believes Trump's presidency has been hijacked by the frauds in the crypto industry, his words, and he doesn't mince them. Please welcome economist, host, and founder of Shift Gold, Shift Sovereign, and Shift Radio, Peter Schiff. Peter, thanks so much for joining us. So, first of all, what do you feel is the significance of this crypto summit and the executive order that Trump just signed on establishing a Bitcoin strategic reserve?
Yeah, I really think it's a national embarrassment that this is happening. It really is just a payoff for the donors that donated to his campaign, people that voted for him based on the fact that they own crypto or Bitcoin, and they're hoping for a government bailout. They want the U.S. government to buy their worthless tokens so that they can sell and make a profit. I think the president's obsession with this industry should have ended once he secured the White House and no longer needed their support. If he wants to make America great again, the last thing he wants to do is encourage us to waste our resources on really what amounts to a worthless industry. The money that we devote to crypto has to be diverted from the productive part of the economy. So the more we waste on crypto, the bigger our trade deficits are going to be, the more dependent we become on the rest of the world to produce the stuff that we aren't producing because we're spending our time, producing tokens instead. So I think it's just, a terrible thing. But at least they didn't commit to buying any more. That would have been even worse. So all they're going to do is hold on to what they've already seized. And so it's not as bad as it could have been. But still, by encouraging more misallocation of resources into this industry, we take away capital that we need for the industries that we really do need to develop.
Okay, we'll get into that, but I want to pull up this comment that you made. It says, I get the rationale for a Bitcoin reserve. I don't agree with it, but I get it. We have a gold reserve. Bitcoin is digital gold, which is better than analog gold. So let's create a Bitcoin reserve too. So some folks thought, oh, maybe Peter Schiff is a little bit of a Bitcoin maxi, but I'd love to hear your response.
Yeah, well, people read into things what they want, but I was just saying that I get the rationale, and that's the rationale that Bitcoin is digital gold. We have a gold reserve, so how about a digital gold reserve? But I don't agree with the premise that Bitcoin is digital gold. I mean, if anything, it's digital fool's gold, and we don't need a reserve of digital fool's gold. So I completely disagree with the premise of having a Bitcoin reserve. But the purpose of that post was to question why we would need a Ripple reserve or a Cardano reserve or a Solana reserve, because they were talking about having a reserve of those tokens as well. And nobody has ever argued that they're digital gold. So I didn't understand even the rationale for including them. So that was the purpose. I understood the false rationale of why we needed a Bitcoin reserve, but I never even heard anybody propose why we needed to include.
Why do you think they were included? Why do you think that Trump posted that he would consider these cryptocurrencies? And Cardano was included among that, and Cardano's Charles Hoskinson was not invited to the White House Crypto Summit.
I don't even think Trump posted it. I don't think he knew the symbol for Cardano is ADA. I think that it was written and posted by people who had something to gain. I believe that the Trump administration or his close allies, family and friends, have been making hundreds of $millions off the crypto community, since the launching of those meme coins on the eve of his inauguration with Trump and Melania. What I believe happened is that some people who drafted that post knew about it in advance, specifically included those 3 tokens because they were buying those tokens so that they could dump them into the Sunday afternoon pump. And so I believe a lot of people were enriched, and this is going to continue to happen. You're going to have manipulation and pump and dumps, and the insiders are going to take advantage of the president's position and his popularity to make as much money for themselves as possible. That's why I think it's a national disgrace that we're allowing the office of the presidency to be used in this manner to enrich a few at the expense of the many. And it's particularly hypocritical when we've got Doge pointing out all of the cases where governments who have been put in charge of programs like the USAID have exploited their roles to enrich themselves and their family members through kickbacks or bribes or whatever. Yet now we have the Trump administration doing the exact same thing, abusing the office of the presidency to enrich the friends and family members of the president. One day they'll look back on this, they'll investigate it, but it really is a blemish on his presidency, which has barely started.
So the executive order leaves open the option of holding other cryptocurrencies that have been seized. And in the future, maybe Trump coin could be a part of it. Maybe World Liberty Financial token could be part of it. And we're seeing that World Liberty Financial at least has struck a deal with SUI.
But why? What purpose is there for the U.S. government to accumulate a stockpile of these tokens? I mean, we don't have a stockpile of anything else. I mean, why are we stockpiling these tokens? I mean, we're not stockpiling publicly traded stocks. We're not stockpiling other commodities that we may actually need. We're not stockpiling, all sorts of assets. Why these assets? It's mainly because these are basically the worthless tokens that his donors are creating. It's just a way, to use the government to rip off the taxpayer. It's the ultimate in rent seeking and welfare. I mean, if you're opposed to government handing out, all kinds of money to special interest groups, you should oppose them doing the same thing to the crypto insiders who could create these coins out of nothing and then get the government to buy them. And in fact, you're actually opening up a huge window of bribery of public officials, because all I have to do is create a coin and then have the government buy it. Or somebody who wants to bribe me, let's say somebody wants to bribe the president, all they have to do is buy his meme coin from him. And, okay, now you put $20 million worth of my meme coin and I'll do this. I mean, it's just, it really is a huge corruption can of worms.
At least for the case of Bitcoin, which is a decentralized currency, nobody owns Bitcoin. They say
yes.
advocates
I think there is a difference between a crypto token, that anybody could launch and then basically profit from, versus Bitcoin, which
and the argument there is that Bitcoin is the future of money, and it's good to have it around when we're navigating space, because you're not going to bring up your gold or your grain up to space, so to speak. You need your digital money.
Yeah, but I think that's a fantasy that it's the future of money. It's not even the present day money. So why would it be money in the future? But the problem is, even if you don't create Bitcoin, there are a lot of people that own a lot of Bitcoin. They bought it a long time ago that would like to sell it to the government. And the government becomes a big buyer that is price agnostic. And so it creates a better exit strategy. And you have the taxpayer as the bag holder, but they're not choosing to be the bag holders. If people want to buy Bitcoin, they can go out and buy it. But the government shouldn't be forcing taxpayers to buy it. I mean, I don't want to buy any Bitcoin. If I wanted to, I can do it. I don't want the government saying, we think Bitcoin is a good investment, so we're going to make that investment for you. Well, I don't want the government trying to figure out what good investments are. That's not a capitalism. The government's supposed to stay out. We're not supposed to have a central planning department trying to pick winners and losers and decide where capital should be allocated because they think they're so smart. I want the free market to allocate capital. And if the free market allocates capital to crypto, okay, maybe the market is right, maybe it's wrong. But the government shouldn't be tilting the playing field, trying to subsidize or encourage one industry over another, or make a speculative bet that this token is going to be the future of money. They don't know, right? And if the Trump administration, if these guys want to make bets on crypto or Bitcoin, let them do it with their own money. Don't go to Washington and do it with my money. Stay in the private sector. If that's what you want to do, if you want to build out the crypto industry, then don't go to the Trump administration and try to legislate it, from the White House. Stay in the private sector.
Peter, always a pleasure. Thank you so much. I know you got to head out, but thank you for the conversation.
Yeah, no, I got a few more minutes if you had one. I just haven't had breakfast yet.
Okay. Okay. Oh, I actually was curious about your thoughts on this concept out there of a 0% capital gains tax on U.S. crypto and the possibility of getting taxpayer money to purchase Bitcoin for this strategic reserve.
Well, again, I would just assume eliminate the capital gains tax entirely. But I think if you're just going to focus it on crypto, I don't even think that's legal. I don't think that the government could favor one particular asset over another by saying, if you buy this asset, you have no capital gains tax. And if you buy this other one, you do. Right. That's the government, again, trying to decide. We think this is the asset that everybody should buy. And so we're going to give it favorable tax treatment. That is a subsidy, and it will divert resources away from industries that we might need into crypto. Somebody might say, well, instead of investing in building this factory to produce more goods so we don't have to import them, I'm going to just throw my money into crypto because there I can get a tax-free gain. So I'd rather gain money in crypto where I don't have to pay any taxes. So that is not what you want in a free market. So I would be totally against exempting particular tokens from capital gains. And again, it opens up a can of worms for all sorts of ways that people would create tokens and use those tokens to get around the income tax in general by trying to convert income into capital gains tax-free in these made in American tokens. So I think there's going to be a whole sorts of tax evasion that you would open up if this were to happen. And I don't think the president can just do it. I don't think he could just declare that there's no capital gains on crypto, because if he could do that, he could just declare there's no capital gains on anything, which he can't do. Tax policy has to be originated from the House and approved by both chambers and then signed by the president. So he's going to have to sell the House and the Senate on the idea that certain tokens should provide tax-free gains to the people who speculate in them. I think that's going to be a hard sell. And then it may not even survive in court if someone challenged it and said, hey, why should I have to pay capital gains taxes when I bought on this asset, but this guy gets to buy these tokens and has no capital gains? I mean, I think you have to treat assets equally. I mean, they have a holding period, like a long term. Well, if you hold an asset short term, it's one way. And if you hold it long term, but it applies across the board. They don't just say, well, this one you can get a long term and that one you can't, so I don't like it.
One more question, Peter, before we go, but tariffs. We saw tariffs being threatened against Canada, China, Mexico now, eroded slightly, given exceptions to the auto industry, a few here and there. And there's concerns about stagflation. So I'm just wondering what your thoughts are on the economic outlook with this potential.
Yeah. Well, we have stagflation right now, and it's going to get worse regardless of the tariffs. But the tariffs will make it worse. Look, tariffs are taxes, and they're paid by Americans whenever they buy imported goods. And there is no such thing as external revenue. It's all internal. Trump is getting bad advice on two fronts, from the crypto people and the tariff people. And he's being misled on both. Trump is under the delusion that the U.S. government can raise trillions of dollars in tariffs, and all of it's going to be paid by China and Canada and Mexico. None of it is going to be paid by those countries. To the extent that any money is raised through tariffs, it's the American consumer who is going to pay it. It's going to come out of their pocket. The way tariffs are supposed to work as far as protection of domestic industry, because the sole purpose of these tariffs, apart from raising revenue, is to bring manufacturing back to America, right? That's the goal. We need to produce more because we have record trade deficits. Well, the only way tariffs will accomplish that is if they make imports much more expensive. And how do they make imports much more expensive? Because Americans have to pay a tax if they buy them. So if we can drive the price of imports high enough, then it may be more profitable to produce those goods ourselves. But the reality is, even the 25% is probably not enough to move the needle, because it would probably end up costing more than that to make the stuff here. So we probably need even bigger tariffs to actually produce the stuff here. So in the interim, it just means that the Americans who buy those things are just going to have to pay much higher prices to get them. But the other problem is, even if Trump is able to drive prices high enough so that, making them in America could be profitable, all right, well, where are the factories going to come from? Where are the supply chains going to come from, or the infrastructure? All that money needs to be invested. Okay, well, who's going to do it? Where's it going to come from? Where are we going to take it away? Right? I mean, if we're wasting our money on crypto, maybe we don't have money to build those factories. But also, who's going to build those factories, invest millions, hundreds of millions of dollars in a project that may take 2, 3, 4 years to complete, when by the time they finish building all the factories, the tariffs could be gone, in which case it's a complete waste, because now they've lost the
It might be from that 17 billion that David Sachs says we lost from selling that Bitcoin.
Well, I mean, yeah, sure. And but what happens when Bitcoin collapses and we lost all the money by not selling? We could have sold a bunch of our Bitcoin above $100,000 and we didn't sell any up there. And now it's down, at 888 or whatever. We lost money by not selling at 109, right? You could always look at, the prices and woulda, coulda, shoulda. But the thing is, to get back to the tariffs, so the tariffs aren't going to work in that they're not going to bring manufacturing home, but they are going to drive import prices up. And the government will collect revenue from those higher taxes, but all the revenue is coming out of the pockets of American consumers. And so a big tax hike is going to weaken an already weak economy. And so it's going to push us more into recession. It's going to lead to more unemployment and ultimately more inflation too, because the Fed's going to end up printing a bunch of money to finance the larger deficits, because the tariffs aren't going to raise nearly as much revenue as they hope, because in many cases, consumers will just stop buying. And therefore, they won't pay the tariffs, but they won't do the buying either. And a lot of the service sector jobs that are associated with that are going to be lost. So, it's going to be a very weak economy.
So definitely I'm hearing the stagflation.
Yeah, stagflation.
Boat
Inflation is going up. The economy is going down. The dollar's going down. We've just had almost the worst week in memory in the dollar, just getting killed. And I think this is the beginning of a major decline. And that is going to really push up commodity prices for Americans. And so you're going to start to see that later in the year in headline CPI numbers. So it's going to be very difficult. And it's going to be very difficult for the Republicans to hold on to Congress in the midterms, given that we may still be in recession by the time the midterms roll around. And so the public is going to be very mad that the problems that they were hoping that Trump would solve actually got worse during the first 2 years of his presidency.
Peter, thank you for your insights. Appreciate it.
Take care.
That was economist, entrepreneur, and host, Peter Schiff. All right, let's take a quick look at Bitcoin price right now. The Coindesk.com data shows that Bitcoin is now down about 2.5% in the red, trading at about $88,563. ETH is down also about 3%, now trading at $21.92. And joining us now to discuss the markets, we've got Tian Zhang. He's the CEO and co-CIO at Third Eye and founder of Phoenix Digital. Tian, Thanks so much for joining us. I know we went a little long with Peter, so thanks for sticking around. But
yeah, thanks for having me.
we've got all this bullish news about a Bitcoin strategic reserve, this crypto White House summit that's happening, but Bitcoin price is actually faltering a bit. What's going on?
Well, I think it's a little bit of sell the news, but also the news wasn't um, as bullish as you would expect. There's no new buying of Bitcoin, and they're setting aside all the other coins too that they specifically said they're not going to buy any more of it, and that they would maybe look into ways to buy additional Bitcoin via means that is deficit neutral. But that just means that I think in the near term that there's no this big demand from the U.S. government in crypto. And so that's been like sort of a bullish narrative. And, the market has now moved on to, what is the next narrative that can push the prices up? And there isn't really anything on the horizon besides macro. Macro comes with tariffs. And, we see that in the markets, markets down again today, despite sort of an in-line NFP. So, yeah, this is kind of like the crypto market, right? Always looking for the next narrative, but this big narrative is now sort of in the background.
Well, macro speaking, I'm seeing that the Nasdaq, the S&P 500, it's basically lost all the gains made since President Trump won the election in November. Bitcoin, at least, is still 20% up. So, where do you see in the macro long-term picture where Bitcoin's headed versus the short term?
Yeah, so I'm a little bit bearish short term. I think this strategic reserve or stockpile, whatever you want to call it, is bullish long term, right? There's less supply to be sold into the market. It's not quite as many as they claim. I think it's around 190,000 Bitcoins, but it's really 80 to 90,000 Bitcoins because like 110,000 Bitcoins have to be returned to this hack from Bitfinex. Um, but it certainly, makes a statement that, the government here is supportive of the industry, supportive of Bitcoin, and it's great to see other leaders in the industry come out to speak against other altcoins being included as originally tweeted by Mr. President last Sunday. Short term, macro looks pretty bad. I mean, look at today, right? I mean, Nasdaq is officially down 10% from the highs. We had a pop in equities post NFP, but I'm just looking at the charts right now. S&P's at the lows, Nasdaq's at the lows. We're through 200 day. It feels very weak. This reversal of U.S. exceptionalism. I think Nasdaq's down, almost 10% on the year. Meanwhile, Europe is up, 15%. China's up 15%. So macro here looks kind of bad. A lot of it has to do with tariffs. A lot of it has to do with Doge. So,
So,
that
what's the best
combination
play
is.
right now?
I think it depends on if you're a long-term investor or if you're like a short-term trader. I think long-term you can just buy these dips slowly, 20% here. If it drops again, buy another 20% of your allocation, etc. But I think it's still time to be defensive. We still have a lot of things to get through on the macro side. The chart looks oversold, but in this case, it's a reflection of the fundamental deterioration of the economy. We see it in the economic data. The GDP numbers have come down quite a bit. Employment is weakening, and
So, it's short
inflation's not
everything
coming
right
off.
now?
Not necessarily everything, like there are things that are like great shorts that we like. XRP is one, Cardano is the other. I mean, given that they're not being bought by the government, right? And they've been artificially inflated, especially XRP, right? XRP has a really high market cap and even higher FDV, and they have unlocks that are coming up as well. And so if you think about what are the retail tokens? It's XRP, it's Cardano, it's a couple other names, right? if the economy is weakening, if we're going into a recession, whether it's like a soft recession or a harder recession, consumers going to get hit, right? And what happens when consumers get hit? Retail tokens are supposed to get hit the hardest. And XRP is the best short because it has the biggest market cap. It has the most liquidity. It trades billions a day. So you're not at risk of like a small cap, going up 5x in your face. And you can pair this with other longs. You can buy Bitcoin. Bitcoin dominance is still kind of like the thing. You can buy some more beaten up stuff like Solana or ETH. Solana especially, right? With the price coming off about 55% from the highs just about a month ago. Solana is only 50% of the XRP market cap. I don't think that makes sense. We know what Solana does. Solana, whether you agree with the memes or not, it generates revenue, it generates on-chain activity. But for it to trade at 50% of the XRP market cap, and even 35% of the XRP FDV, that doesn't really make sense to me.
All right, Tian, thanks so much for your insights. Appreciate you coming on the show.
Thank you. Appreciate it.
That was Third Eye CEO Tian Zhang. Our next guest was a runner-up to become the next chief of the Securities and Exchange Commission. She's a fighter for the crypto industry. Please welcome Baker Hostetler partner Teresa Goody-Guillen. Teresa, thanks so much for joining us. We cannot hear your audio at the moment. I'll just give you a moment to turn it on. We did hear you earlier at the beginning of the show, so when we did our pre-check. All right, we're gonna give, yes.
Okay, there we go.
Yes, we hear you now.
Thanks so much, and thanks so much for having me and the generous introduction.
Teresa, I just wanted to get your thoughts on the White House Crypto Summit happening today and the recent executive order signed for a strategic Bitcoin reserve. What does it all mean? What's the significance?
I think this is very significant. I'm very encouraged by the summit, and I think these are the types of conversations that we need to be having. It's finally kind of getting industry together with regulators and really trying to define what these different things are, what the different digital assets are, and then finding the right approach for them in a way that makes sense, both from an industry side as well as from a regulatory side. And so I think this is so critical because the government hasn't been able to really identify and really assess this market and this market structure. And so now that industry is more involved and they're having that conversation, I think that's exactly what we need. So I'm very encouraged by the summit.
I saw that you've written a paper, Paving the Path for Crypto Clarity, a framework for digital asset regulatory structure. And it's a discussion draft, but maybe you could outline a summary of some of the highlights that you want to convey in creating a regulatory framework for the United States.
Yeah, thank you so much. So it's exciting. This is the beginning of the kind of product, not the end. So it is a discussion draft, but in talking with different, lawmakers and regulators and industry, I just had so many conversations connecting the dots. And what I've seen so far is it kind of feels like people are trying to go on a path and track a route, but we don't have a map yet. And so, I think it's important to just take a step back, and it doesn't mean it's a long, it's lengthening the process in any way. I think it actually is shortening it, but assessing what the market is, what the market structure is. So, and kind of building that map. And then from there, you can identify where you are and where you want to go, and then you do the route. And so just looking at historically how we previously assessed different types of assets when new types of rights have come up, there's generally a structure that we've followed. And so this is just applying that same logic and that same structure to these different types of assets, and kind of what is the what is the 1, 2, and 3? Like, what are the steps that we have to do to get to the regulatory framework?
Well,
and
I see
so,
that you propose
you know,
here a structured approach to creating a regulatory regime that balances innovation with consumer protection and accountability. So how do we do that?
So looking at all the different types of digital assets we have, they can be grouped basically by their characteristics. Some of them are different, right? So some of them are more like payments. Some of them are more of a tribal type of coin. Some of them are more like investments. And then some of them are different types of rights that we haven't really seen before. But if we group them by their characteristics, and then we also look at, whether or not there's any correlation between their movement, in reaction to external forces, then you can start to them together based on those similar characteristics. And then once you have those groupings, then you can look at, what are the different types of risks? What are the concerns, if any, right? And then you look at, does the market take care of that? And if not, is some sort of regulatory intervention needed? And if so, then what is that regulatory intervention? So it's a process.
I've seen that you've created 12 digital asset classes. Maybe you're envisioning a world here where everything will eventually be tokenized. Is that correct? Maybe you could go into some of those asset classes first.
Yeah, well, I think it's important to look at this from the perspective of being in the fourth industrial revolution, right? And so when there was the introduction of electricity and machinery, things changed. And similarly here, this introduction of distributed ledger technology and AI, and there's so many kind of forces that are moving together here and developing so quickly that are being built on top of and with using each other. So from that backdrop, from that perspective, this is, I see something that's going to completely change the way that we operate and function in financial systems. We're far away from that happening with total financial systems, but I think we can look at it more as something a little smaller, as a new business form, a new way of allocating assets and resource allocation. So it functions very similar. Some networks function very similar to the way that a business forum would. And so I look at it in the perspective of kind of what the network is and the ecosystem is, and they can be different too. And so I think it's important to identify some of the things that are familiar to us and some of the things that more easily fall within a logic that we're accustomed to, and which of those are kind of challenging those traditional logic notions that we have, and maybe have to be considered in a new way.
I can think of a few. I mean, meme coins. What asset classes that fall under? NFTs, DeFi, stablecoins. Yeah,
well, I go through and kind of break down a lot of the different types of digital assets, just kind of explaining. And feel, everybody feel free to fix these, right? Improve everything that I've done. I'm hoping people improve what I've done, what I did with Isabel Corbett Sterling. But it explains how those characteristics would lend themselves to a particular type of classification. So, for example, meme coins, I have a non-functional inert asset. So basically, it doesn't really do anything technologically, right? There's no functionality. Oftentimes, though, it's tribal, and people can be very very invested in their, not in a financial sense, but as a person emotionally in a meme coin, because depending on what the meme coin is and what it represents, and being part of that community. And so there is a place for meme coins, and just like every other type of assets, there's different kinds, and some might be viewed as higher quality to some people and lower quality to other people. And so I think that's an important consideration too. NFTs, it's generally more kind of like a collectible, and so it's oftentimes it's asset backed, and so it's more of like a representation of some sort of ownership or property or something like that. And so depending on what the NFT represents, it could be a variety of things, and then it's always depending on the structure. If it's fractionalized to a certain extent, then that kind of changes the qualities of it. But I think NFTs are a different, they're a class in themselves. They're not fungible, and they often represent, some copyright or some sort of intellectual property or some other property right. And I think that that's important to recognize in a different type of characteristic.
So Teresa, once we understand the qualities and characteristics of all the various digital assets out there, what do we do from there?
Well, once we kind of break down and classify these, then it's looking at the risks that are associated with them and the concerns. Like, is there information asymmetry or something like that that has to be resolved, or is there consumer protection risks that our regular laws of prohibiting lying, cheating, and stealing aren't enough, right? It needs some sort of oversight. So once that is identified, then you can kind of figure out where these tokens, the different types of tokens, fit within the legal rubric. And then, if we need to create anything new, then we could do that. And it's once you have that clarity and that certainty, that's when people are able to really transact more in the industry freely. There's no question about what rules apply. So I think that framework is needed to enable this industry to really flourish like it should.
Your paper kind of touches on the Howey test, which tried to fit digital assets into an old framework. Does a new framework need to be passed by Congress, or, from your paper, it seems it just needs to be clarified?
Yes, I think the SEC could clarify what an investment contract is, or Congress can do it as well. But the SEC has very broad exemptive authority, and so if it wanted to clarify or carve out something from different from Howey, it does have the ability to do that. And I do recommend changing the Howey test, because as it's been applied, it's shown that it's pretty boundless, and it's not being applied in a way that is predictable, and it can be really stretched beyond its bounds. And so I think that there needs to be more clarity. And I propose, an alternative test for an investment contract that is basically based on Howey, but it requires a quid pro quo. So it requires, a clear promise and a clear some sort of a contract. It doesn't have to be a written contract. It can be an oral contract, but that I am, as an investor, entrusting my funds to somebody else, and I am promised, one, their effort, and two, the proceeds from their effort. And so kind of clarifying a little bit more what that is would be helpful. And it's not just for digital assets. Like, the Howey test has also, it's had its problems along the years in different ways. And I think it's just been exacerbated by its application to digital assets.
Do you think that we could get a Howey test update from the Supreme Court if the Ripple case that is making its way through the Supreme Court right now goes all the way there?
I think it's possible, but remember, the Supreme Court is also kind of limited in what it can do. So it's interpreting the law, and it's not creating law. It's not supposed to be creating law, but just interpreting it. And since we already have kind of this evolution of the investment contract, it's possible that they could change it in a way that would be helpful. But
would it be the ideal way through Congress, or is it organically through precedent?
I think, I mean, ideally it would be either like an exemption from the SEC, so a rule, or it could be implemented by Congress. I'm a little bit more cautious with having it in a statute right now, because we've seen that you can come up with a test and it seems like a good test, and then it turns out that it's being used in a way that wasn't originally anticipated, and the unintended consequences. So I'm a little more cautious about putting it in a statute, and I think it might more properly be in a rule. But then it could, there's a lot that the SEC and the CFTC, for example, could do that is then later kind of more solidified by Congress, and so it's not as easy to change as rules. Yeah.
I see that your paper also sorts through all the regulatory agencies, the SEC, the CFTC, the FTC, and how they would regulate in cryptocurrencies, digital assets, and what have you. And what we saw from the Biden administration is that it was very unclear. And we saw in Gary Gensler's case a battle, if you will, of egos, of trying to see who, how much they could encompass in terms of their agencies' might and power and coverage of the digital asset industry. So curious what your thoughts are on how we sort through these regulatory agencies.
Yeah, and that's another thing that I think is so great about the President's Council and this summit is bringing them all together, all that expertise, and having these different regulators, because, the FTC, some of these cases might be more properly an FTC case about, the question of whether it's deceptive advertising or not. And so the FTC does handle that when it's not a security. And there's a lot of laws already that exist that prohibit, basically lying, cheating, and stealing. So the things that the fraud that happens on the market. But then looking at the assets by their characteristics, and then seeing which regulator makes the most sense for that, like oversight, particularly if it needs additional oversight. So focusing on the FTC that does so much, more on the consumer protection when it comes to advertising, and then commodities is more when you're dealing with kind of these fungible assets that are sold in a derivatives type of market, and it can apply also to those assets that aren't on a derivatives market, but it's generally their enforcement is on derivatives that are on a futures or other derivatives market. So, looking at their capabilities and how are they already structured. So if there's some sort of spot market, for example, regulatory regime for things that might be deemed commodities, well, the CFTC doesn't have that, and it would have to create that. Right, or it would have to apply its other its derivatives market rules to like the spot market to the extent that they apply. And so there's different changes. And if you think about what the agencies cover, what their expertise is, what they are accustomed to doing, are they accustomed to having a disclosure regime that they oversee, or is that market more set up where the exchanges and the traders are basically the overseers of the market, and they're kind of like self-regulatory organizations or have various duties where they're more the regulators? And so that what I'm working on now is I'm actually comparing the various different ways that exchanges, like trading marketplaces, are, what the regulatory regime is, to compare them all and see which one of these is most closely suited to something that we might want, for if we want anything at all. So if it's agreed we want something, what should apply. And I think all of that is helpful to try and identify what is the best, most practical way forward. How can you do this most quickly? And really bring the order. That's what this is. It's like orderly, efficient markets with protection. And how do you do that? And I think this is how you do it.
Awesome.
It's just
Teresa,
a lot for one person to do.
Well, folks, if you have some insights, hit up Teresa at Baker Hostetler. Her paper is Paving the Path for Crypto Clarity, a framework for digital asset regulatory structure. It's a discussion draft. Join the discussion. She may be the chair of the SEC one day, so it's a good idea to talk to her now. Teresa, thanks so much for joining us.
Thanks so much.
That was Baker Hostetler partner Teresa Goody-Guillen. That's our show. I am looking at the comments. This is a live show, and a lot of you are asking what time the Crypto Summit is at. It's at 1:30 to 5:30 p.m. Eastern Time. That's about in 2.5 hours. So check on CoinDesk.com. We have got continuous coverage. We'll be tracking that summit for sure. That's our number one with all of our journalists right now. And thank you so much for joining us. I'm CoinDesk Senior Anchor Christine Lee. Check out our YouTube page at youtube.com/CoinDesk for more. Also, Consensus Toronto is coming up in May. We'll bring together the top leaders, change makers, and deal flow in the crypto space for you to access in person. Sign up for that at consensus.coindesk.com. Have a great weekend. Taking a look at Bitcoin right now, $88,498, still slipping in the red despite all this bullish news. So we definitely have a lot more news developments coming up in the future. It's going to be a volatile ride. So join us for the roller coaster. All right. Have a great weekend.
Well, thank you very much, everyone. Great honor to have you. I know you've all been working very hard and very successfully. And it's a wonderful place, the White House. I want to begin. Is Johnny here from World Cup? I want to thank you for this election. And they just had a presentation in the Oval Office, and I thought this was such a beautiful, this is the trophy. This is the big deal. The World Cup is the biggest sporting event, and Gianni Infantino is my friend for a long time, and during my first term, we worked out a deal to get the World Cup, and then because of lots of interesting things that happened, I ended up being president when it showed up. I was always disappointed. I wasn't going to make it. I was going to serve 8 straight. Instead, we did it the hard way, but maybe the more important way. So I will be with you as president, Johnny. So maybe you could just say a few words and show how beautiful the World Cup trophy is. Thank you. Yeah, sure, please. Yeah.
The famous key.
That's a great key.
You want to open it, President? Or shall
Well, you go ahead. I trust you.
So this is the new trophy of a new competition. It's called the FIFA Club World Cup. The 32 best clubs in the world with the absolutely best players in the world. And for the first time in history, this competition takes place in the United States. Opening game on the 14th of June.
Right.
Obviously, in Miami, final on the 13th of July this year in New York, New Jersey. And it's not that, it's also special because there's a key, and because, as you can see, if I manage to do that, it's tricky. It's
Oh.
So this is a trophy. It is a trophy which represents, and that's why I think it's interesting to show this trophy exactly in this photo here, because it represents the past, but it's also projected to the future. There is no other sports trophy which looks like that. It has engraved the history of the game, of soccer, or football as we call it, the participating teams of the first edition, the stadiums, beautiful stadiums in 11 cities in the United States of America where this competition will take place. So at the same time, past, present, and projected to the future. And if I may, President, say another 2 words, and then I let you work. I would like to congratulate the President and the administration for, not only for the World Cup, the Club World Cup, the World Cup, and the great work done, but also for this initiative that you are speaking about here. If I may add something in this respect, I'm not an expert at all, but FIFA, as you know, is a brand which is globally known, a very strong brand. The soccer economy in the world is worth around 270 billion a year. 70% of that, Mr. President, is in Europe. So imagine the potential that there is around the world only in soccer if we develop it. And so FIFA is very, very interested under my presidency to develop a FIFA coin, to do it from here, from America, and to conquer the 5 billion soccer fans in the world. So if there is anyone here who is interested to team up with FIFA, here we are, together with the United States of America, and we will conquer the world of soccer with the FIFA coin.
Thank you. That coin, that's right. That coin may be worth more than FIFA in the end. It could be quite a coin, actually. Huh? Anyway, thank you, Johnny. Great job. I just thought you should see this trophy because it's really, it's the biggest sporting event in the world, and we have it here. And we appreciate being selected. Thank you very much, Johnny. You do a fantastic job. And welcome to the first ever White House Digital Assets Summit. I know that many of you have been fighting for years for this, and it's an honor to be with you at the White House. I want to thank the White House AI and crypto czar David Sachs, Treasury Secretary. This is David right here, in case you don't know. You know David. And a man who's doing a great job as Secretary of Treasury, Scott Bessent, who's right here. Scott, thank you very much. Commerce Secretary Howard Lutnick, wherever you may be, Howard. Hi, Howard. He's doing some interesting work right now with all that's going on. He's right in the middle of it and doing a great job. Thank you. SBA Administrator Kelly Loeffler. And hi, Kel. SEC Commissioner Hester Pierce. Thank you, Hester. Acting CFTC Chairman Caroline Pham. House Majority Whip Tom Emmer. Hello, hello, Tom. Representative Brian Stile. Thank you. Brian, thank you very much. Digital Assets Council Director Bo Hines. Good, Bo. Great job. And many other distinguished guests. We have a lot of very distinguished people around the table. Some of them will be speaking. I want to thank Marco Rubio also, who's right over there. And we have tremendous people very interested in this subject. And last year, I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet. And we're taking historic action to deliver on that promise, as you know, around the table. Yesterday, I signed an executive order officially creating our strategic Bitcoin reserve. And this will be a virtual Fort Knox for digital gold to be housed within the United States Treasury. That's a big thing, Scott. The federal government is already among the largest holders of Bitcoin, as you know. Really one of the largest holders in the world, with as many as 200,000 Bitcoin obtained via civil law and various other forms of law, and including enforcement actions. These existing holdings will form the foundation of the new reserve. Unfortunately, in recent years, the U.S. government has foolishly sold tens of thousands of additional Bitcoin that were worth billions and billions of dollars had they not sold them, but they did sell them, mostly during the Biden administration. Not a good thing to have done. From this day on, America will follow the rule that every Bitcoin knows very well: never sell your Bitcoin. That's a little phrase that they have. I don't know if that's right or not. Who the hell knows, right? Who knows? Who knows? But so far, it's been right. And well, let's keep it that way. The Treasury and Commerce Departments will also explore new pathways to accumulate additional Bitcoin holdings for the reserve, provided it's done at no cost to the taxpayers. We don't want any cost to the taxpayers. In addition, my order directs federal agencies to conduct an inventory of all crypto assets currently held by the U.S. government and determine how they can be transferred easily to the Treasury. Non-Bitcoin digital assets will be held in a new U.S. digital asset stockpile where they will be managed properly. My administration also is working to end the federal bureaucracy's war on crypto, which was really going on pretty wildly during Biden until the election came about. About 5 months before the election, he became a big fan because he heard how many people were in favor of it and how many people love it and respect it. But I guess it didn't work out too well for him. People understood what was going on and paved the way for groundbreaking innovations in institutional finance. Under the Bitcoin administration, regulators strong-armed banks. I mean, they really did. They strong-armed banks into closing the accounts of crypto businesses and entrepreneurs, effectively blocking some money transfers to and from exchanges, and they weaponized government against the entire industry. But I know that feeling also. Maybe better than you do. All of that will soon be over, and we are ending Operation Choke Point 2.0. Now, some people really suffered. It was ridiculous what they were doing, but in the end, They came around, but they came around for the wrong reasons. They came around only because they wanted votes, and they saw that tens of millions of people were against them because of what they were doing. I also want to express my strong support for the efforts of lawmakers in Congress as they work on bills to provide regulatory certainty for dollar-backed stablecoins and the digital assets market. They're working very hard on that. This is a tremendous opportunity for economic growth and innovation in our financial sector, and will really go a long way. I think it's going to be a tremendous, we feel like pioneers in a way, of tremendous method of growth. And things are very much tied, and we want to keep it that way, the U.S. dollar. Long into the future, we're going to keep it that way. I hope lawmakers will send that legislation to my desk before August recess if they can. And they're very much working with you, and you know a lot of them, and a lot of them were committed right from the very beginning. So I just want to congratulate you all for being at the White House today, and a man who knows more about Bitcoin and AI and just about everything else than anybody, David Saxton. I'd like to have you say a few words, David.
Thank you, Mr. President. We're all here today because of your leadership, your vision, and your generosity, and I really want to thank you for that. We're also here because of your desire to make America great and to introduce a golden age in America, including for digital assets. And we're here because of your love of innovators, or as you might say, high IQ people. Yeah, we know you love high IQ people. And we have about 30 of them here in the room today. These are the top people in the digital asset industry. And one other thing that I think that you love is legal fairness. This is an industry that was subjected to prosecution and persecution for the last 4 years, horrible lawfare, and nobody knows what that feels like better than you do. So we really appreciate the fact that you understand legal fairness and that you're always willing to fight for the right thing, for legal fairness. You never back down. You stand defiant, even in the face of an assassin's bullet. It's an inspiration to everyone in this room, I think. So it's an honor.
Thank you. Thank you.
So I just want to say it's an honor to work for you. It's an honor to work for a president who works every day to get so much done on behalf of the American people. Your administration is moving at tech speed. It's really amazing. It's actually faster than any startup that I've been part of. Is that your administration moves even faster. So I just want to say thank you for having me be a part of it. I've enjoyed every minute of it. I love working for you, and thank you again for this opportunity.
Thank you, David, very much. Appreciate it.
And now I just want to pass the ball to Secretary Bessent.
Scott?
David, so today, when President Trump has signed the executive order to establish the strategic Bitcoin reserve and stockpile, we're going to position the United States as a leader among nations in the digital asset strategy. It's important for the United States to recognize this fact and get ahead of the other nations in the digital age. We applaud the President's direction to use the digital assets already in possession of the nation, and we are going to establish this Bitcoin reserve. We will use this authority to augment the assets side of the United States balance sheet. As I've said many times, President Trump is creating assets for the American people, while most past presidents have created debt, and a large part of this asset program can be in digital assets. We are going to end the regulatory weaponization against digital assets. The Biden administration's actions did nothing other than punish innovators, and that all of you have made it here today is really a testament to your fortitude. Much of Treasury's responsibility in this order relates to the tax code and determinations around risk weightings, and I'm here to assure you that we are going to work with the Controller of the Currency, the IRS, and we're going to rescind and amend all applicable previous guidance. And we are going to put a lot of thought into the stablecoin regime, and as President Trump has directed, we are going to keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that. Thank you.
Technology is at the foundation of the Trump presidency. He understands technology, he embraces technology, and he's going to use technology to drive America forward. The blockchain and Bitcoin technology are a key part of that thinking, and embracing that, and here today shows how much a leader the Trump administration and our president is. He understands it, he embraces it. As you said, you're a pioneer in this place, and this is where we're going. We're using the blockchain, we're using Bitcoin, we're going to use digital assets to pound forward, and Donald Trump is leading the way. Can't be more proud of you today.
Thank you very much. Thank you, Howard. Kelly, go ahead, please.
Thank you, Mr. President. This is truly a historic day, and as a crypto founder, I couldn't be more proud to be part of your administration. You're moving at the speed of tech for sure, and I will just say it's a great day to have the war on not just crypto, but the war on innovation done. And under your administration, we are truly going to enter into the golden age. And I'll just say, as the administrator of the SBA, small business is a tremendous network that crypto can be deployed against, and so the SBA is open to crypto. So I look forward to working with all of the leaders in this room to advance your efforts here. Thank you.
Thank you, Kelly. Thank you very much. Tom, please.
Well, Mr. President, I want to say thank you. I want to thank you for the amazing team that you put together. I want to thank you for David. I mean, this kind of a meeting, no one in this room could have envisioned this just a couple years ago. You are the one that has the vision. You're the one that said, we are going to do 21st century finance right here in the United States of America. I've been doing this for 9 years. It is amazing how far we've come, and that's a credit to you, Mr. President, and your leadership, and God bless you for doing this, because it's going to make a huge difference with everything else you're doing. And by the way, Americans love it. They're going crazy. Thank you, sir.
Thank you, Tom. Thank you very much. Thank you. Thank you very much. Anybody else? Go ahead, please.
Does anyone want to say a couple of words? Cameron or Tyler, do you want to?
You're very shy in front of the camera.
Cameron, I think you said something earlier that I thought was really profound. You said that a year ago you thought it would be more likely that you'd end up in jail than at the White House. Not to put you on the spot, because you didn't do anything wrong, but that was the environment a year ago. But do you guys want to say something, either one of you?
Sure, that was actually Tyler who said that. but it's
sorry, I still get mixed up.
But yeah, we never thought that we'd get attacked the way we did in our backyard after trying to do the right thing for so many years and always trying to raise the bar with respect to regulations. So it's truly wonderful to see how things have changed and how the pendulum has swung back in the way that it has. And we've always felt that the U.S. should lead in Bitcoin and crypto, and it's ours to sort of lead and win. And it's just wonderful what President Trump has been doing with this, and we look forward to working together. And thanks for inviting us, David, and setting this up.
Thank you. Thank you both. Please.
I was just going to say thank you, Mr. President. Cameron takes credit for a lot of my things I say, so it's not the first time. But the U.S. won the internet, and the U.S. should win crypto. So thank you for your leadership on this.
Thank you both very much. High IQ individuals around this table. That's what I always say. We need high IQ. So thank you very much. Would anybody like to say anything? Please.
Okay, we'll come right.
I just want to express my deep gratitude for the seriousness with which you're approaching our industry and how you're actually helping guide it in the right direction. I've worked with many central banks in other countries, and when I was working there, I was wondering why I, as an American citizen, can't help the United States financial system reach this higher level that the world is on course towards generally. Right. And so I'm very grateful that finally there's been a new level of kind of common sense and adoption of these ideas. Me and the other people in this room do believe that the crypto, blockchain, Web3 infrastructure is the next iteration of the financial system. And I think that the U.S. should have its leadership position continue in that new financial system. And I'm very, very happy to see people like David Sachs, Secretary Bessent, Secretary Lutnick taking this very seriously with their time, and very grateful to them too. So I'm just overjoyed to see this, and I think it is a big part of how the U.S. can continue its role in the global financial system. So thank you.
Thank you very much. I thought it was very important that we stay in the front of this one. This is a big one. And as you know, China is pushing forward and very strongly as usual. But we're way in the lead, as we are in AI and other things, and we want to stay there. So I thought this was very important, and we have some brilliant people sitting around this table, and it's an honor to have you involved. But we want to stay at the forefront of everything. And this is a very important day in your lives. I know you worked, some of you, very long before people really understood what was happening. And so I congratulate you, but this is a big day. Being in the White House is a big deal, and you have great support. Thank you all very much. Thank you very much. Thank you, please. Thank you very much. Thank you, media. Thank you. Please. That's good. That's good.